Trading is all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
All right, 1212, ladies and gentlemen, welcome back. 1212, please leave a comment if you can hear me, if you can see me.
Good afternoon, sir.
Hello. Good afternoon. Can you hear me?
Yep.
Yes,
We can.
sir, yeah.
There's literally 30 people in the Zoom, yet only 2 said hi. Where are the manners?
People are shy.
Hi, Thomas.
I had a 20-minute nap and I have no idea where I am. When you have a nap in the afternoon, have you ever had this? Quick power
That's
nap?
the worst.
Oh god. I wake up and like, which planet am I on?
Hello, Thomas. It's Amy.
Hey Amy, how you doing?
I'm alright. I only joined yesterday, so you saw some of my comments on the Discord group.
Oh yes, the Amy Full. Yeah, fresh meat. How you
Yes.
doing?
I'm good. I'm good. How are you?
Not too bad, not too bad. Thank you. Welcome to the team.
Thank you.
We have all the hot girls. +1 now. So let me just put some chill music. I'm gonna kill this.
Hello, Thomas. How are you?
Hello. Very good, thank you, Shakil. How are you?
I'm good, sir. Good.
Mi amor. Alright. Oh, there you go. Our famous leader, Viktor Orban. Anyway, today is a new day. Today we have labor market data, continuing and initial jobless claims. Amy, can you help me please, darling? Because we have 27 minutes to come up with an analysis.
Scary. Right.
Alright, so First question. What's the difference between initial and continuing jobless claims?
Oh, I have no idea, Thomas, at the moment.
All right, no problem. We always start somewhere. If you don't know something, feel free to ask questions. That's why, I'm here to help. So the difference between initial and continuing jobless claim is that initial represents the number of people who claim unemployment benefit for the first time. It's the claimant count in the UK. It's called jobless claims in the US. Continuing jobless claims represents the people who claim unemployment benefit for 2 or 3 or 4 months, so 2+ months or 3+ months. I don't know the exact date or the exact
Hi, good afternoon.
time period. Hello, time period, but it's like longer term unemployment. So there's a difference. Yet initial jobless claim has 3 stars. So according to investing.com, it's a very, very important data, and continuing is less important. What do you think about this, Amy?
In what way? What do you mean? I mean,
So
obviously,
like impact.
is it the oh, so if it's I think I did actually say on Discord, if the initial jobless claims, not the initial, but the the initial jobless claims, if it goes higher than the previous week, then that has a negative impact on the US dollar, in my opinion, and it boosts up gold. I think
The end result is good. Yes, it does affect dollar, but the thing is that if the jobless claims is higher than expected, it's not a direct correlation with it is a direct correlation with gold, with dollar strength, but it's actually not that. It's not the initial. It's not the jobless claim increase that's affecting dollar. It's the effect, because the initial jobless claim is going to affect the perception of interest rate perception. Because then, if the jobless claims are increasing, that means that more people, out of the job. It's not really nice. But the thing is, with the current interest rate and inflation environment, the central bank's job is to increase interest rate, because between interest rate and inflation, it's said to be there's a direct correlation. The higher the interest rate, the lower inflation is, because what the central bank trying to do is to control the money supply. The money. You probably heard us saying that money makes the world go round. Yeah, and it's very true. If things, if inflation is out of control because there's too much money in the economy, because if there is too much money, that's causing the problem, inflation. And the Fed has multiple ways to affect inflation or to control inflation or the money supply. And one of the most aggressive is interest rate increase. So if they raise interest rate because the inflation is high, that means there's going to be a demand for dollar. Because if they increase interest rate, so the first is the benchmark rate going up, then the interest rates are going to follow on the interbank lending market, then every other interest rate or derivation of interest rate is going to follow. So the first one is always the benchmark rate, then interest rate. And if interest rate is increasing, that means that's return for investors. So let me ask you a question. If you were an investor, Amy, if someone gives you an opportunity of 2 possible investment, number A is 5.25% return, so let's call it 5% return annual, or you get a piece of shiny metal like gold. Which one would you choose?
I'd go for gold.
No, it's investors think differently. They want the yield. So when you have money, gold doesn't bear any interest. It's just a piece of metal. It's just a piece of metal. It's rare, it's expensive, it's bloody expensive, but it doesn't give you any return. So in investment and finance, investors want the return. If they had to choose between gold and yield, they're going to choose the yield because that's guaranteed.
Okay.
And in inflation, if you put your money in a bank account, it doesn't bear much interest, is it? But if you invest in somewhere, maybe you're lucky enough not to inflate your money away. So that was the underlying thought process or methodology, how inflation expectation is affecting the dollar, etc., etc. It's a lot of information, but how can we use this information to trade high impact economic data? It's very easy. We did it this morning already. And the way to do it is, first we have to find a high impact data. I think labor market data is quite good. So now the forecast for initial and continuing jobless claims is not much. There's no increase in continuing jobless claims. There's a insignificant increase in initial jobless claims. That tells me that people are not staying in longer term unemployment, not as we would expect that more people staying in unemployment, and some people entering into unemployment. Now the problem with this is, as an economist, I pay more attention to continuing jobless claims, because the worse continuing jobless claim is, the less the interest rate expectation is. Because let me show you the circular flow of income. This is the basis, Economics 101. So basically, if you're a household, or if you got a job, oh, bloody hell. If you have a job, you get paid, and you spend that salary for goods and services, right? So that money is going to circulate in the economy. It goes from your wallet to your bank account or someone else's bank account, and your asset becomes a liability, etc., etc. So money goes around, money makes the world go around. Now, if there are no unemployed people, so if unemployment or initial jobless claims not increasing, like 1729 versus 1729, no new unemployment. So money keeps circulating in the economy. Is that inflationary or deflationary in your opinion?
Is that inflationary or Oh, I don't know. You're putting me on the spot here.
Yeah, but that's how you develop. Diamonds form under the highest pressure. Did you know that? And you look like just a diamond, Amy.
Thank you.
Would someone like to jump in? And what do you think if jobless claims is not increasing that much? Is it inflationary or deflationary?
I think it's inflationary.
Yeah, I think it's inflationary too.
Yeah.
That means money is going to circulate in the economy. Now we know that if the number is not increasing, or sorry, stays the same or decreasing, that's inflationary. That's a very good thing. We narrowed down a lot of economic concepts, a lot of theories and everything into one single scenario. And that scenario, ladies and gentlemen, if jobless claims is lower than expected, or not changing, that is inflationary. So the first scenario, let me just delete this one. So the first scenario, if jobless claims is not increasing or becomes lower, that is inflationary. So gold is going to be pushed down. The second one is if jobless claims comes higher, right? So initial and continuing jobless claims, it's gonna go up above 1750, 1760. That would be very good. 250, 275, something like that. Anything above 242. That's going to be deflationary, because because people are, getting out of the job, losing their income, and the money, the circulation, is going to stop because they have nothing to spend, no disposable income, right? And that's what the Fed wants. They want to push the economy into recession. That is the number one goal, to cause unemployment and to break this circulation. Not too much, because that would become a credit crunch like we experienced in 2008.
But Thomas, is the economy not already in a recession?
The UK? Yeah, it is.
Yeah.
No, well, technically not, because there are many ways to calculate. You have to be 2 consecutive quarters in negative GDP to technically call it a recession. But now we're talking about the US, because it's a US data, right?
Yeah.
In 70
yes.
minutes.
Yes. That's
So,
why I just thought the US was already in recession.
you know, it was tough because technically speaking, it was a recession, but this was the first time when there was no unemployment, but it was negative GDP. So Joe Biden said that wasn't a recession. They didn't accept it. They just said no, it wasn't a recession. And technically they're right, because it was 50-year low unemployment. So how can you call it a recession if there was, everyone had a job? No, it wasn't. So it's a tough one. But
they were pushing interest rates up higher and higher each month. From what I know, it was only last month that they actually thought they're not going to do anything. So June there was no interest rate hike, but I do believe that in this month they're going to push that up again.
They will.
Yeah. Okay.
You can use many tools to see what is the interest rate expectation. There's a Fed Watch tool by CME.
Okay.
There's loads of numbers on it, but basically you need to see that 225, so 525 basis point to 550.
Yes.
That means that 99.8% of the traders are expecting an interest rate increase. So you were right, Amy.
Thank you.
Most likely they will raise interest rate.
Yes. Okay.
So, we know the 2 scenarios. It's simplified down into 2 scenarios, but you know where we started 15 minutes ago, and we arrived into two very simple scenarios, higher or lower. But I maybe gave you more details about how does it affect the interest rate expectation, etc. But this is what we have. And now we're moving down to the technical analysis. So first we start with the fundamentals of macroeconomics. It's going to be tough today because you see the numbers are very tight. There will be no change, the forecast, so there will be a surprise, most likely, right? Which is good, but it's difficult to front run the market. It's difficult to predict which direction it's going to go. When we have a forecast, or ADP or different numbers, it's easier to forecast. I personally think jobless claims is going to be much higher. It's impossible that it's going to stay the same. I don't believe it. So I think there's going to be a surprise to the upside. Price is moving sideways. So if you're entering now, it's not a financial advice, but I think that gold is going to continue the bullish market structure. There will be a surprise to the upside on initial jobless claims. So what I'm expecting is 2 possible entries. Either now, the first one, or it's going to pull back to the pivots and then move higher. So we're going to have a sell the news and buy the fact, or immediately it's going to push up.
I'm already in.
Oh, hey, Raj. Welcome back, brother. Very good.
Wagwan, how are ya?
Very good, thank you. I just had a power nap this afternoon.
I'm seeing some higher high on a wedge, so I'm expecting some sort of bullish move.
Technically speaking, it is a beautiful bullish market structure. Unfortunately, because we have the summertime, low liquidity, when there is less people on the other side to take the trades, hedge fund managers are in the Hamptons, it's quite boring. We have these big ass wicks and whiplashes and sideways movements, so make sure you
That's what happened yesterday, isn't it?
Yeah, so make sure you pull up your trousers because gold is trying to anal you during the summertime.
I've got a pretty small lot size for now because there is news, so I don't want to expect too much from anything right now.
Are
But
you wearing braces?
yeah, because if he does gonna push up, then we do have early, head start pretty much. If not, we'll get back in again. Because it's rejecting yesterday's high and London low. So far, that's what I can see. So that's telling me something. Plus the wedge is creating higher high, higher lows, really.
Yeah. There's a comment on YouTube. Ali Mogadan says that interest rate going up is good for dollar, bad for gold. But the question is, do you know when will be the interest rate increase? My dear friend Ali Mogadan. He's a long time follower, so he's a good guy. The interest rate increase is going to be, let's have a look on the calendar. Is it going to be today? No. Is it going to be tomorrow? No. Is it going to be next week?
Yes.
Yes. Absolutely next week. So,
I think on the 25th or the 26th.
yeah, it's going to 26th of Wednesday. So
Yes.
there is, the Fed is in a blackout period now. They're not allowed to come out and say anything a week before the interest rate decision. It's called a blackout period. And it's my favorite saying, when the cat is away, the mice will play. So the market is going to screw everyone over, and they say, well, we have a week, let's push up the prices, and when the Fed increasing the interest rate, we're going to slap down the prices. It's like the cat is playing with a dead mouse, or your bank account. But long story short, I'm holding long positions. But as we get closer to the initial jobless claims, and because we have a very difficult to forecast jobless claims today, I'm going to start reducing the position. And
tell us, how do you get into your positions? Like, obviously you're positive, and I don't know. I mean, I find it. I'm a funded trader, and I don't know how I've done that. But I mean, how do you get into your positions? And you know that obviously you're running positive, and you kind of keep.
Not always. I have losses too.
Sure, but more times wins. I'm sure.
Yeah, but you only joined yesterday.
I know.
So
but
what I do, I always start with the fundamental analysis, the macroeconomics, exactly the same way I did. So if I will start the macroeconomic analysis, like we discussed, I try to trade around news. Most of the Instagram traders, they avoid trading news like plague because they don't understand. But I do have my fair amount of knowledge in economics, and I work on trading floors. So what I do is I try to come up with a strategy with a bias, hypothesis. What if the initial jobless claims is going to be, it's possible it's going to stay the same. Come on, impossible during this volatility. So I expect that it's going to increase, hopefully, based on the previous numbers. So I come up then, or narrow it down into two potential scenarios, and I have my bias that which direction it's gonna go, and if then look at the market structure and then bring in the technicalities, and everything is pointing into the direction that it's going to continue to be bullish. It may break or not, but we had a fair amount of wins in the past few weeks. Not all wins, because we had quite shitty, but for example, this was last Friday CPI. It was no drawdown, 200 pips, straight win. We entered just before the news, and this is how I trade today. Again, entered into long position, but now we're getting closer to the data, so I'm going to reduce it, the positions. And those who would like to join the Alpha community, I send a link into the YouTube chat. You look to your right now. Look to your right. Use that link to get the same daily analysis every day. Morning briefing, live trading, etc., etc. Oh, gold is pushing down, so a bit of a drawdown, but luckily it's not, and nothing heavy position. And I have a buffer that I can use. from the previous positions. This is why we're not placing all the money in one single position. That would be crazy. And when you have, build up long positions, you can afford to have wider stop loss before the news. There's the benefit. It's not doing so well. So, going back into the chart, that's my live position. Bit of a drawdown. You can see that if it comes down, maybe it's going to touch the pivot. That's why we have, a bit wider stop loss. People asking buy or sell. I'm in a buy, but I have my bias. So it's important that everyone makes their own analysis and then start trading. We have this consolidation. We had consolidations many times over the week, so it's ugly to trade in the summertime, so you have to be ready for drawdown. But data is coming up in 6 minutes. The name of the pip counter is Blatek. Let me show you quickly. So these are my open positions. And the pip counter is on the left hand side. It's called Blatek. No, sorry, Blue Digit FX, open trade. And 5 minutes before the news, now it's time to book some profit. You see, even the lot sizes are not crazy big, so it's 1 or 2 lots. Summertime I always trade with, half of the usual lot size and wider stop loss, exactly because the low liquidity.
Hi Thomas, Alan say hello.
Hello.
How are you doing?
Yeah, waiting for the initial jobless claims.
I'm
It
waiting
seems
too.
like the market is pushing down a little bit. Could you share your thoughts on US 30? I can have a look, but it's earnings season and I hate to trade during earnings season. So don't expect magical analysis. I had some good forecasts this. Why the fuck would gold is pushing down? Dirty. It's going to. So this one is deleted, invalidated. Now it's coming back to do a retest on the pivot. And US 30, my friends. I think it's going to continue higher. Personal opinion. Kevin Chua, bro, you still selling gold? No, I'm not. I'm buying. And on US 30, it's going to be tricky. But I would go long on US 30. Don't be afraid. I know it's high. I know it's bullish. Pull the trigger what no one else does.
Hey Thomas, how are you doing?
Oh, good afternoon. 3 minutes until the news.
Makes my heart beat really fast when it comes to news.
Why? Oh, sorry. This one went a bit away. So yeah, US 30, definitely I would go long. You know what? Actually, put my money where my mouth is. I'm going to enter. How many minutes? 1 minute and 30 seconds. High impact news. Well, it's going to be a tough forecast today. But I think the labor market has softened a little bit. So that's why I'm long on gold. To put my money where my mouth is in US 30, I'm going to enter into a position in US 30. Da, da.
Data in 40
Yeah. You can see the stop loss on the screen, but the problem is that I have the pip counter and I can't see the rest. But anyway, going back to focus on gold, I have long positions on gold. Reduce the positions already because we have some high impact news coming up, ladies and gentlemen. So brace for impact in 20 seconds. Get your wallets ready. So exciting. Labor market data, jobs data. If it becomes higher, gold is going to fly. And we have 9, 8,
Gold's
7,
rejecting
6,
lower.
5,
Push
4,
up.
3, 2, 1. And let's have a look on the jobless claims number. 1, 2, 1, 2.
dropped.
1, 2, 1, 2. What's the number?
It
fuck.
dropped.
Yeah. Ignore the buy position because the data are actually continuing. No. Hold on. The initial jobless claim decreased, so it's going to be a sell the news by defect type of scenario. So wait a little bit. It's still massaging the daily pivot. So what I'm going to do is I'm going to enter into another buy. I'm holding the buy positions. Let's see how it's going to react to the pivot. It's quite confusing data. It's mixed because you can see the continuing jobless claims have increased heavily. So I'm holding the buy positions and in fact entered another buy position. Yes, no joke. This is what I have. We have to play with the stop loss because there was a bit of a dip, and that dip caused by the mixed data. It's a sell the news by defect type of scenario. So it's a buy on my end. Don't be afraid, hold my hands and stay calm. Look at the data. Think wisely. Technicals. Gold is dancing on the pivot. In my opinion, it's going to hold. If you look at the data, there was a bit of a dip. Nothing to worry. It's caused by the initial jobless claims, which dropped significantly. But on the other hand, look at the increase on continuing jobless claims. Massive increase. So more people staying in unemployment longer term than people entered into unemployment. So where does it leave us? Longer term unemployment is more important than initial unemployment. You have to stay calm during the high impact data and you have to think logically. Let me just post the chart into Discord. One more final look just to see. The manufacturing index, on the other hand, look at this. negative. Business conditions did improve, which is not good. So it's a very mixed data, guys. Increasingly mixed data. Let's have a look on the open positions. 228. Yeah, it's a sell the news and buy the fact type of scenario.
Thomas, what about US 30?
US 30, the market open is you know, it's going to move at the market open. We'll see. Jean the Jew saying technically is clearly bearish. I would disagree with that, but you know, that's why we have a market. Some people see sell, some people see buy. I think that, you know, if you look at the market structure, it's ugly, but it's going up. So let me just show you higher highs and higher lows. Gold is dancing exactly on the daily pivot. That's a red line there. Quickly just go back to the chart and let's see how many pips it dropped based on the news. 58 pips. Now usually gold reacts like 100, 200 pips if it wants to. Let's have a look on the open positions. Quickly. Gold did it so many times this week. It was going in negative and then it pulled back and rallied 200 pips. Do you remember last week's CPI? Did exactly the same. I was like, what the fuck is happening? Swimming in drawdown and then 200 pip straight profit. It just skyrocketed. So I think it's just a low liquidity summertime. Hoping. Yes, I see you commenting. I told before the news. Yes, you see everything in the charts. Oh, actually the yields. Thank you so much, Zaina. Let's have a look on the yields. Yields are one of the best indicators for gold prices. Oh, it's gone up from the wedgie now. It's not good. But the problem is that today the yields and gold correlation started to break down a little bit because yields were going up, yet gold was going up too. So I think that the fears of recession is bringing back the appetite of investors for gold. Anyway, let's have a look at the position. If it goes down any lower, I might have to think about reducing, but remember it's summertime, low liquidity. We have these shitty situations where the market is just not behaving the way it should be. Last week's CPI exactly the same. Analysis was correct. It was going negative, despite it was clearly deflationary data, and it pumped. Mehrad Raisi only sells forget buys, will go down to 1956 and then 1944, then comes back up. It's a very good analysis. 1956. Anything is possible, brother. I always say anything. Send me your chart where you entered into position.
It's
They are
ready
not
to
good.
push.
It's ready to push, yeah.
Yeah.
Come on, guys. If you're selling, show me your positions. Put your money where your mouth is.
We are holding your hands.
Come on. Anyone who's selling, send me your screenshot, your MetaTrader, your live account, or your funded account. Go full margin. Don't even use a stop loss. Just no stop loss, no problem.
I'm selling, Thomas, but I'll send you a profit, okay?
How dare you?
Because you told me to sell. You told me to sell.
No, I didn't. I didn't.
Well, on that data. Well, anyway, maybe it'll turn around.
Let's have a look. Now gold is edging slowly a bit below the pivot, so it's easier to show on TradingView. So this red line is the pivot. Now it's coming back into the consolidation, and it's edging a little bit lower, you little cunt. Still holding the buys. I'm expecting a push to the upside. Yields going up. Let's have a look on the dollar index. Dollar index pushed up a little bit, but it will change. I'm going to switch the screen into... Let's have a look on US 30 as well, in the meantime. Steven Sequoia, DXY is up, then gold down. Not necessarily. Gold has many variables which deriving the actual price you see on the chart.
Thomas, can I ask you a technical question?
Yes, absolutely.
Does it mean that now the majority of traders are selling the gold and that's why the price is going down, or how it is?
Well, the actual price that you see on the charts is derived from many things. It's not just sales, it's derived from the options market, the futures market, commodities market. CFDs at some point join into the stream, but mostly it's the interbank that really denominates the price. And it could be as well that it's not because people are selling gold, because if you look at the data, it's in my opinion it's deflationary. I mean, look at the continuing jobless claims. 36,000 more. Initial only gone up or only decreased like 14,000. So there is a divergence. There's more unemployment, more people stay in longer term unemployment than people entering into unemployment. So it is deflationary. So it could be that because the data is deflationary, banks started to offload their positions, start to feed gold into the market because they know that people are going to buy. It looks like that it's selling but it's going to buy. So this is why, you know, maybe they put too much in the market, and that's why it's going down a little bit.
Thank you for the information.
You're welcome, but summertime trading is the worst. I told multiple times. You know exactly, we had this shitty consolidation. It was painful to watch and rally 200 pips every single day. We faced the same shitty market. So just stay and hold. If you're selling, sell. If you're buying, buy. I made my bias and analysis. Oh, it's getting lower. So this position is unvalidated. Let's have a look. I'm still holding the buy positions. How do I put in an object? Now he will run from the live stream and cut his positions. I think I'm still here, brother. Now, guys, the positions I'm having, it's less than 1%, so I don't need to worry about, you know, losses. It's risk management. If I were to enter, you know, 5 or 10 lots every single position, then I would worry. But because it's summertime, low liquidity, I'm not worried because it's well below, you know, my 1% risk.
That's the money for our summer holiday, Damas.
Pardon?
That's the money for our summer holiday, Damas.
No, it's not true. Yeah, that's the reality of trading. Sometimes you have to have stomach to stick to the analysis, and drawdown is part of the game. But it doesn't, you know, it matters that how much drawdown you're in. If you using crazy big lots, you can't have wider stop loss. Then you would have to worry because you're over leveraging. Stay calm, stick to the analysis. If it doesn't work out, I know my risk or how much I can lose. Simple as that. Worry about yourselves. Everyone focus on their own position.
My stop loss is at 1970, and I think the banks are after my stop loss.
It is possible. Come on, gold. Can I hit the mute button? Oh, now suddenly people like, oh, gold is gonna go up. No, while you were selling, then stay in the fucking sell.
Pushing up now a little bit. It was.
I'm gonna add positions here. I think it's gonna go up now.
Thomas, by the way, Angelo introduced me to your group. I just thought I'd let you know.
Oh, Angelo. Yeah, I've seen it, yeah. He's a good guy. By the way,
Yes,
did you
he
know
is.
that Angelo started his Signal service? So I do
Yes.
recommend this guy. Young guy, very talented, very humble. I like him.
Very nice guy, yeah.
Saiful Khan, I love you being so patient for your trades. Yes, it's you can't force things. Sometimes you in a drawdown of 20, 30 pips, but during summertime that drawdown can be 60, 70 or even 80 pips because we have those big ass whiplashes. Just to give you an example, if you look at the chart, how many sideways movements and how many dirty moves to the downside you see? A lot. And this is summertime trading. You have to be patient, guys. Usually I trade with 5 lots. That's my average standard lot size. But on the screen you see lots of 2s because it's summertime. You can't trade the same lot sizes during summer as you do normally. That would be fucking suicide. And smaller lot size allows to have wider stop loss to survive these whiplashes. Thomas, stop talking and take your shirt off.
Oh, Habibi.
Oh, Habibi.
They would ban me on YouTube.
You can leave your hat on.
Thomas, you can just tell them you took your shirt to dive behind the price, bring it up.
Good luck to us for today. Gotta go. I got knocked the fuck out.
See you later, alligator.
See you tomorrow, mate.
Bye.
Bye.
Go to the moon, maybe. Who knows? Anything is possible. During summer, you have to be patient with this bitch.
I thought they have only bitcoins at the moon.
Oh god.
They sent all the bitcoins to the moon already.
That was a good one, Stoyan.
Thank you, I'm trying.
Car Culture TV says, Thomas, what prop firm would you recommend personally with no affiliation? FDMO, 100%.
The gold bounced from yesterday's pivot. Would that be a good thing?
That would be very nice. Let's quickly have a look on the market. Yes, this is summer trading, guys. I know many people expecting, you know, immediately 1,000 people in a Lamborghini overnight, but summer trading is it's been like this for years. Yeah, it was a nicest entry. I do accept that, but you know, that you need to get the direction right. Plus, we have US 30 as well. Hopefully, it's going to skyrocket. What I wanted to do. Yes, have a look on the yields. 2 years. Oh, the yield started to push down a little bit. Hopefully, it's going to come down, and that's it. How nice it would be just immediately, you know, suck up back to 1981 and start pumping to 2000. That would be awesome.
Thomas, do you know the car Trabant from communistic time?
Fuck yeah. And Lada 1200.
I mean, for people who cannot afford Lamborghini, can buy a Trabant.
Or a Dacia Duster.
Who needs a Lamborghini?
What is your overall strategy? I'm using macroeconomics. I studied economics at university and did my master's in actual financial trading. That was my subject for both of my dissertation or project work. And then I started on carbon emission trading desk. So it's like an illiquid commodity. Then I moved to Thomson Reuters and I moved to the hedge fund, and I was a risk manager for a bank. And before in the hedge fund, there was fixed income and cash equities trader. So we always did the analysis starting with macroeconomics. Always, every single day, when we had, you know, sitting with my colleagues, we had brainstorming. We looked at, you know, the macroeconomic data, same as you see on economic calendar. We looked at the exactly same economic calendar. The only difference was that we used Bloomberg because, you know, that's standard. If we traded on capital markets with derivatives, not options and, you know, all the hardcore ones, but futures, swaps. We had an ISDA or ISDA agreement. That's why we had to use Bloomberg. So we looked at the same exact economic calendar in Bloomberg. We looked at the news and we started speculating, mostly on interest rate, because interest rates are the alpha and omega of every single market. Interest rate create prices for every single market. And we read a lot of news, Financial Times, Bloomberg. That's how we can come up with the speculations. For example, today I speculated that because continued jobless claims was much greater, the standard deviation from the mean was much greater than initial jobless claims. So more people stayed in unemployment than entering into unemployment. That signals to me that people start to struggle to find jobs once they enter into unemployment. Yes, the initial jobless claims, that fluctuates because people let go, people lose their jobs. Sometimes it's greater, sometimes it's lower, but the number one, the most important, is continuing jobless claims. And then I go down into technical analysis and I look for entries. As simple as that. You have to have a plan. And that's my plan on the chart. I like to write it out. That helps me a lot to understand and visualize it. I think that's the best way to understand the plan. Yes, sometimes, you know, there is no clear entry sometimes. It's dirty sometimes, it's swimming drawdown. But once you get the direction right, I mean, just look at the freaking chart. How many longs we had in the past few weeks and months? Whole July was long, and we benefited so much. But it's ugly, it's dirty sometimes, it's not clear. You have to accept the reality of trading. Smaller position size, wider stop loss. That's the only way to survive some trading. Plan your trade and trade your plan. Exactly. People are going to laugh at you. People are going to comment rude things. But, you know, people, when they... Dumb people only afraid things that they don't understand, and they're going to laugh at you. But then, fuck them. Stick to your plan. Keep grinding. Keep going. Don't ignore everyone else. Just focus on your job. So, we have a new 4-hour candle coming up in 1 minute, ladies and gentlemen. The first position I depicted on TradingView was invalidated, but I think it's still valid long position. So if you're looking for entries, you're looking to buy a Lamborghini today or tomorrow, I think that gold is going to go back to 1987. If it I mean, it's just trading below the pivot. If you want to trade technicals because it's easier to digest, I think price is going to pull back. It's a good question. Ikmal is asking, Thomas, how many friends you have lost ever since you started trading? Just wondering. A lot of friends I've lost. Trading, and especially I was a hardcore trader because I put everything in trading my whole life. I went to university to study economics. I was the vice president of the trading society. I went to the university challenges and the trading competitions. I wanted to be I knew at university that I want to be a trader. And for that dream, I had to sacrifice my free time, my relationship, my friendship, everything. And I made the big mistake that I sit in front of the chart 12 hours, 16 hours, doing Asian sessions. That was the biggest mistake of my life. The biggest. It's not worth it, guys. And you don't need to sit in front of the chart 8 hours, 10 hours. Yes, at the beginning you need to learn, but once you understand how to trade economic news, it will become much, much easier. Fake story, yep.
I think trading is one of the hardest professions to succeed in.
I agree. I agree.
For trading,
it's the most difficult skill, in my opinion. And I think a lot of traders have high blood pressure, high stress levels, because it is so. But the thing is, you have to have, for me personally, I've had to have a structure in my life. I've had to put a routine in my life, you know, and I think it is all about, you know, you have to eat healthy. You've got to make sure you're okay in the head, so to speak. So that's kind of, you know, I've been trying to do this for about 4 years, and only beginning of last year, I got funded.
Well done. Yeah, exactly. You nailed the most important things. You need to be clean when you go to markets. You can't have relationship problems. You can't have. You need to be healthy, both in your head and in your body, because you need to endure the stress. You need to exercise. You need to eat healthy.
Yes,
I 100% agree with that. 100%. Otherwise, you know, it's going to eat you up alive.
You can do
I see the comments on YouTube that I didn't know that how many people went through the same things as I did. It's tough, especially when you're alone. It's the worst. No one understands. But anyway, long story short, was it a sell the news and buy the fact? We're about to find out. New York market is opening in 28 minutes. What car are you driving? I'm driving a Dacia Duster. Let me show you. A Dacia Logan. Yeah. That's my car. Exactly the same car. Yes, it's lovely, isn't it? Look at that beauty. Oh, that booty.
I like.
You like it? Oh.
Let's raffle it.
Doesn't matter what car I'm driving. The matter is
I have a car from 96, bro. 96.
it's almost an old-timer.
Yeah.
30 years.
It's my
30
beauty.
years of age, you can register it as an old-timer.
I can do the same as my friends have a credit on a car from 2023. I can do the same as them.
I have Volkswagen Beetle from 1973.
That is an absolute beauty, a Volkswagen Beetle. Buy Ferrari, bro. Fuck that. You know, that's the problem, that people want expensive cars, but that's a liability. That's a freaking liability. You know how much does it cost to service a car at that level? One single tire of a Ferrari, you can buy a brand new Skoda Octavia, or you know, a cheaper alternative. And the servicing is just ridiculous. I'm not in that price range.
It's good to stay humble, Thomas.
Yeah, one day maybe I'm going to buy a Porsche, but Ferrari would be too much. It's a different lifestyle. Vonóhorog. Szevasz Csaba. Liability, standard brokey excuse. Just say you can't afford the broski.
Finish him.
Yes, mate. I love when someone is trying to, oh, you can't afford a Ferrari. Oh man. Typical brokey excuse. Yeah. You know what I would buy if I had money for a Ferrari? A house paid in cash and a flat to rent out, to get money, income from that.
Robert Kiyosaki.
Trading is the hardest way to make easy money.
Yep. Yes, the RS6 Audi. That's one of my dream cars, or the Q8 RS. But R6.
It's a nice car.
But again, you know, the servicing and everything. It is a liability, and it's. I would be afraid to drive that. What's your current net worth? Now that is something that no one has. I'm not going to disclose that, and you know, you shouldn't ask these questions from anyone. What's your net worth? I mean, in some countries they will slap you for this question. And someone is asking about the next data set, which is going to be existing home sales. What do you guys expect from existing home sales?
Go down.
If there are more sales, like they're very active on the market, that means people are still spending money. So it kind of will be inflationary.
Say that again, sorry.
If the house market, if there are a lot of sales, that means people are still spending money on properties, and it's inflationary. But if it's less deals, less sales, that's deflationary.
It's very mixed. I mean, if you look at the data, sometimes it's going up, sometimes it's going down, but the standard deviation is somewhere around 10 million. There were some big surprises. Wow, look at March. That was a big surprise. 21st of March was 58 million. Surprise to the upside. Let's have a look. 21st of March, 4 o'clock. Out of curiosity. April. Was it 21st, right? 21st of March. Sixth. Oops. Delete this. 21st of March. Yeah, it was a massive sell. And there was a time when there was a big surprise to the upside and gold sold off because that's inflationary. Simple as that. Now I'm going back to the live position.
Going up, price is going up.
Yay! Do you know what's the problem? Why price isn't going up? Because there's not enough likes on my stream.
What's your take profit there, Thomas, on your positions?
What's my what?
Your take profit?
I don't have for these positions. I don't have take profit. But for the lowest, maybe let's take profit at the last high, which is 1987. I think a good take profit level could be 1982, 1983, somewhere around that level. Yeah, definitely. Okay, it looks like that we're out, so I'm gonna reduce the risk a little bit. I'm gonna move down to lower time frame. I think we are out of the woods now, and we're going to see a hopefully a reversal. Don't increase too much. Stay within the red box because we have New York Open coming up in 20 minutes. Oh, and gold is going up. What a surprise. Someone said that, you know, I'm going to cut the stream and run away, but I'm still here. I trust my analysis. Have some trust and some faith. Yes, it's going up. Why is gold going down when it was inflationary? Should not be when inflationary people should buy gold. No. That's when interest rates are low. Because gold is an inflation hedging. It's confusing. Many people got it wrong. You should only buy gold. You should only buy gold when inflation starts to kick in. But when inflation is very high, no, that's a very good mistake to buy gold. Because when inflation is high enough, central bank going to raise interest rates, raise interest rate, and when interest rate is increasing, it's a direct competition for gold. As I gave the example to Amy, when you have two investment opportunity, 5% annual return or gold, everyone would choose 5%.
I said gold because I'm Indian and we like gold, Thomas, so we keep it for years and years and years. That's and we give it at weddings to our children and things like that. So it's a big thing. That's why you
nice
get
tradition.
all the people, Indians, buying gold.
Yeah, and you dress up the bride as well.
Every
Yes.
every single Indian has a gold in his home.
That's why gold price keeps on going up, because Indians don't stop buying gold.
Edders is asking, Thomas, with the lifetime membership, does that include the morning meeting setups and trades, etc.? Absolutely. I mean, there's no catch. Everything is included. Morning briefing, positions. Right, Amy? You just joined yesterday.
Yes, I actually didn't do
Gold is going up.
Is it?
Yes.
Fantastic service.
Yes.
Fantastic service.
Okay.
This is not really a service. This is a
Indians are buying
community,
gold.
a lifestyle.
Yeah,
It's a
I
game
told you guys.
Yeah.
Trading gold in summertime is the worst for any market. So, you know, small positions, wider stop loss, and shitloads of whiskey. Patience.
Patience. Of course, Thomas, patience.
Yeah.
I mean, unless you want to lose your hair like I did, you can stress,
Yeah.
but fuck me, I'm not going to stress anymore.
I'm in my way to lose my hair. I did enter at 72.70. I
Your
told
TP.
that this-
Since I joined,
TP,
I have
don't
no
know. I don't have
stress.
TP. But my enter was at 72.70.
Wow,
cool.
that's nice.
I say it on the Discord, I will wait to the silly move that it's doing every day this week. And then I will buy. I closed at half already because I'm happier with some profit booked. That's real account. And now I have a runner. My TP I have an 87.
Damir Akiran is asking, can a novice join your membership? I mean, Amy is a novice. Amy, can
Yes.
Dami join it? I think
Yes,
I try to explain things, why market moves in a certain way. I try to explain economics and macroeconomics and fundamentals, the way I trade it on the trading floor. Yeah, we have a
The
website.
the reason why I joined your group is because there's plenty of when you look at trading, there's lots of technicals out there. You can learn all that anyway.
Anyone can draw a line in it.
Yeah, you can learn smart money concepts, you can learn ICT, you can learn trends, you can learn reversals, support and resistance, supply and demand, you name it, you can learn it. But for me, it was more about these fundamentals, because I just I don't know how to interpret the data. You can see the data, no problem, but you need to interpret it in the right way. And that's the bit that I'm missing. That's the bit I'm missing in my trading journey, hence why I joined you. I haven't done your courses yet at the moment, because I'm actually going to commit my weekend to do that.
To be honest, like you can use any technical concept. You can use MyStyle or SMC or ICT. That's going to give you a solid understanding about the fundamentals. That's very good. But the problem is that people trying to approach the market from the wrong perspective, they jump in straight to technicals and they think that technical is the answer because they can see everything in the chart. I mean, that's what they've been told by their guru. Like, you don't need to learn economics. You can see everything in the chart. Fuck that. You can learn any technical concept. It gives you the same result, 50-50% or maybe 60-70. But the thing is that there is another entrance to the market, which is fundamentals and macroeconomics. And there's a reason why it's called financial markets. the reason why there is an economic calendar, the reason why the market is reacting to financial and economic indicators, because it is financial market. But yes, you can see many things in the charts. Scary how accurate can be some trend lines and some supply zones and all that. But generally speaking, when there is a surprise in, for example, when there is mixed data, how can you see a mixed data that it's a sell the news and buy the fact? How can you interpret the results of these many numbers, business conditions, manufacturing index, counting jobless claims? How can you interpret this just by looking at chart? You can't. And this data moves the market.
And that's why I need to learn from you, Thomas. That's my next bit. That's my jigsaw. You know, but the missing puzzle in my trading journey jigsaw.
Oh, I'm your little jigsaw. That's the nicest things I got to said
Couldn't
today.
read anymore.
I don't call you a jigsaw. I'm just saying your knowledge. Your knowledge is so fantastic. So that's what I need to get to
Amy,
now.
why do I feel that you're flirting with me?
I'm not flirting with you. I'm a married woman.
You're not. Damn it. I'm married too. So I'm married too.
Is
You're
your
married
wife
as well.
also watching the stream?
Or
I've got a
being
daughter
empty.
that's probably as old as you.
But you know, if you married, I married. That's like 2 minus equals 1 plus, isn't it?
But then, I think my children are just the same age as you.
All right. I think yeah. Well, how old? Well, no.
Now
I
you
thought
blush.
I thought you like 32, Amy.
I'll share some, not on here because there's loads of people on here, but when we have an opportunity, I'll share the photos
Oh, you're gonna send me some photos? Yeah, do it.
of my daughter's wedding. Of my daughter's wedding, not anything else.
Whoa. Okay, that was.
See, you guys are so wrong. You've got a wrong mind, thinking wrong. Okay, so where are we now? It's still going up, so that's good. Let's come down a little
Hello,
bit.
Thomas.
Hello, Mustafa.
Thomas, I sent a picture to like my analysis. I see a wedgie on the 15
Oh, I
minutes.
thought you sent me a picture of your ding dong.
Oh yeah, no. Can you see this? I share in the Discord group set on share my chart.
All right.
I feel like maybe the gold will go down again.
That's the question of feeling, my friend.
No. We don't think about that.
Feeling is the worst part of this.
Yeah. I mean, it's you feel it. What is the logical reasoning behind it? Do you expect some sort of data? Do you expect?
It's yes, like the data is coming again. So maybe on the New York Open, they will touch and maybe go back down again.
Maybe.
Yep.
Anything is possible, brother.
But I'm waiting for the test, for the retest.
Yeah, maybe.
I have 10 accounts of maybe. They blow at all with my maybes.
That's know what. Okay, so
now
let me.
I'm 1K to fund an account for 400.
Instead of to avoid maybes and what if, I draw everything out on my chart. I make the plan. And there is no what if. There is what if the data comes out higher? I buy. What if the data comes out lower? I sell. What if the data is mixed? I continue the original market structure or the market sentiment, which was buy. So eliminating all of this uncertainty, because uncertainty going to cause only losses. I guarantee that. Everyone can agree on this. If you're uncertain on something, you're going to change your mind, you're not sure, what if? No, you just simply write it out, make a plan, stick to the plan. Doesn't matter how inconvenient it is. You saw how much greeting I got this morning, or when we started the stream, and suddenly gold starts to go up, and then, oh, maybe this idiot is right. Just stick to the plan.
Okay. Thank you, Thomas.
Sell now is an option. We don't for the guy who don't enter and buy downstairs. It's the only option I can see now, because nothing a point to sell now.
I'm
maybe
already
he's
in the
right.
buy
I
from
mean, we have
1972, but I'm waiting. Let's see what is happening.
we do remember, guys, that we have earnings season that can pull down the trousers of all of us, not just me, you and me together, standing in front, pull down trousers and bend over. Earnings season is ugly. It's every single day companies are reporting. We'll see.
Hello, Thomas.
In that case, you just protect your position. I'm in profit, just protect my position.
Indeed. Make the plan, stick to the analysis. And what I'm interested in is Taiwan's semiconductor industry. Stock fell 3.5% after the Taiwanese chipmaker forecast a drop around 10% in 2023 sales. That's very good, guys. I'm just reading out the news. Why is it good for gold? Because people are afraid of recession. And if the semiconductor industry goes down along with the construction industry, that means recession is coming. And this Taiwan semiconductor industry or manufacturing company was on my radar today. And if you go to investing.com, if you look at the earnings calendar, you can see, was it the revenue that they missed? No, the revenue is good. So what was the news?
Some snapshots behind.
Oh no, sorry. Even though the revenue was good, then you can see that they're forecasting a drop in sales, 10% drop. It's significant. I mean, 10%. Imagine that you lose 10% of your salary. That would be disastrous. So, yeah, I think I'm gonna pull out from the US 30 position. I'm gonna keep gold because the recession fear is hopefully going to take over. Or should I stay in US 30? I'm gonna keep. It's only a small position, but gold, we have good chances after this news that it's gonna go up.
Existing home sales coming up in half an hour.
Oh my god. Ramirez,
hello, Thomas?
Ramirez, do you want to do the honor to make the analysis?
Well, I'm just going based on what I'm reading here. So he's saying that if the action is greater than the forecast, that means it's good for currency. So if it's good for currency, then it might be a little bit bad for gold.
Let's try to step away from.
Und wir waschen deine Haare, wenn ich zurückkomme.
Guten Tag, Anna. Wie geht's?
Oh, good. Sorry.
That's all right. So Ramirez, try to forget the currency strength because there are many variables. Think about the home sales as inflationary or deflationary. So try to do the same analysis as I did. If the initial what was the data? Sorry. Existing home sales. If the home sales are increasing, is that inflationary or deflationary, Mr. Ramirez? So when home sales are going up,
If the home sales increasing,
more
so
money
it's
is being
like,
spent.
Yes.
It's more money is being spent. That's inflationary. So home sales is higher, then it's gonna go down. If home sales is lower, it means that the economy, this industry is contracting. What's the forecast? Higher or lower?
It's lower.
It's lower, which means deflationary.
Deflationary. So
It's
gold will
deflationary. Gold is going to go up. And this is it. In 1 minute, literally, we made a full analysis. And now I can move.
Sorry, I was on mute. Just talking to myself, but yeah.
I can move the stop losses into, not all, but now it's running in profit.
That was amazing buy.
Simple as that. And now I have to move my TP. I moved my stop loss before. Now I move my TP.
Yes. I think if it is clear 1981, it will go definitely to 1987. Let's see.
Oh, yeah. Now, where are the buyers? Sorry, the sellers. I want to see them. Send me a screenshot.
They are muted.
Suddenly they disappeared. That guy said that I'm going to cut the stream and run away, but suddenly he's nowhere to be seen.
But actually, these are not the sellers. These are the ones who got stuck in a cell.
Right, I'm gonna start taking profit because now it's 4K on the line.
Another Dacia. Ka-ching.
Yeah, I'm gonna buy a Dacia Duster next to my Logan. Thomas, bro, please quick your Nasdaq. No, not today. I'm on holiday from tomorrow, so. 50 seconds, and we're going to have New York Stock Exchange coming up, and that's it. And then 30 minutes later, existing home sales. Does these setups only work during market opens? No, we do trade in London session as well. That's why we have the morning briefing. And by the way, guys, if you want to join the Alpha community, you want to get the same analysis on a daily basis, you want to see my pretty face every morning at 8:30 talking about macroeconomics and how this and that is going to affect markets, like fundamentals, macroeconomics, monetary policy, you know, all that things which your guru is trying to avoid. Look to your right now. Look to your right into the chat. Follow that link. And we have the market open. Make sure you reduce the positions because you don't know which direction it's going to go.
US 30 is flying.
Hey. Which means we might going to have some sell-off on gold because risk assets are taking on. Make sure you book some profits, guys. All right.
Thanks, Thomas. I've come out of gold, but I made good profit.
It's very good. Good decision. From now on, it's you know, if you haven't made money already, then maybe you can make on US 30, but I wouldn't force market. Oh, US 30, you cheeky bastard. 70 pips already. In a jiffy. Yeah, I think it's still US 30 is gonna go much higher. That was the chart I sent out before the stream. Yeah, it's going well.
I'm booking some of US 30.
Very nice.
Yeah, that's a nice push. Almost 100 pips.
Yeah, almost 80 pips or something. Alright, guys. Almost 2 hours, we can call it. That's enough work for me for a day. If you would like to join the Alpha community to learn and be in the best place, follow the link on the right hand side. And guys, thank you so much for watching. Thank you so much for having trust in me. I know it's inconvenient sometimes, but you know, that's trading. At least I stay here, even in drawdown, and you know, monitor the market. Anyway, thank you so much, guys. I'm gonna be on a holiday for a week. That is going away.
So Thomas, very quickly, you're away next week. It's quite a critical week next week because of the interest rates. Are you going to be dipping in and out at all?
No.
Oh.
I mean, I teach the guy. You only joined yesterday, so it's not. I know it's not fair, but the guys, some of them are extremely experienced because we traded.
I can help out if needed.
Yeah. Stoyan, Albert, Ivan, Luis. Many of these guys, they know exactly. We traded all of the interest rate decisions in the past 2 years.
Okay.
So you're in good hands. I tried. Anyway, I will do a live stream just to show you, only for members, okay? Just for you, Amy.
That's very kind of you. Thank you so much.
Anyway.
Habibi.
There you go. You got it.
I
Thank you
see
so much,
some
guys.
romance.
Thank
You're
you.
away.
Take
You're
care.
away. I'm gonna be
Thank you, Thomas.
Bye bye,
on
Thomas.
holiday.
Thank you.
Bye bye.
Bye. See
Ciao.
you.
Nice vacation.
Bye, guys.
Bye, Thomas. Take care. Bye bye. See you.
Appreciate
Bye.
it, boss. I was here anyway.
До свидания, Thomas.
Na zdrowie,
the
towarzysz.
doubt word.
All right, guys. Thank you so much. Honestly, took profit on gold. US30 is pumping. What else do we need? If you want to join the Alpha community, and if you want to become a member, and if you want to understand finally how economics works and how all of this gibberish nonsense data moving the market, join the community. It's a one-time, lifetime fee. Everything is included, so there's no secret, no hiding. But anyway, thank you. I will be on holiday, and then I'm closing down the joining. There will be no joining. Only, I think there's 2 places left. Yeah, 2 places left. I'm closing it down because I'm going on holiday. Take it or leave it. Thank you so much, guys. Thank you for the trust. This is the Alpha Facts.